Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, our reason for buying our life insurance is often linked with our need for protecting our loved ones. Our life insurance was earlier considered to be relevant for the primary bread earner of the family. Now, this no longer holds true. Today, shift in family dynamics has been driving us to reconsider our approach towards life insurance and having our partners or spouses covered under life insurance plans. Now, opting for joint insurance plans is one way to do this. However, just like other insurance plans, this too warrants caution. Now, one question that crosses our mind when we think of this plan is whether or not it is the most viable option to insure our partner. To help answer these and understand the concept of joint life insurance, we have with us Yashish Dhaya, CEO and co-founder of Policy Bazaar. Welcome to the show, Yashish. Now, what is a joint insurance? I mean, explain that for our viewers, please.
Sure. So, life insurance is a product where if everybody understands that, if I take life insurance, if something happens to me, my family gets, if I've taken a 1 crore cover, my family gets 1 crore cover, right? So joint life would be where me and my wife both take a 1 crore cover. If something happens to me, she gets 1 crore. If something happens to her, I get 1 crore. Because she's as important to the family as I am, or maybe less important, more important, we can all decide that, we can debate that, but that's what a joint life cover is. Now, the beauty of this cover is, suppose we were to purchase it, if something were to happen to her, I would get the 1 crore, but I'm still alive and the policy still continues. And was something to happen to me after this, the further 1 crore will still be paid, and that would go to, let's say we had made one of our children the nominee, it would go to that child, right? And then they would be distributed within the years. So the concept of joint life is, instead of buying two separate policies for two individuals who are, who are largely married, but they could be other relations, then, instead of buying two separate policies, you buy one policy in which both of them are covered. And if one has an unfortunate incident, the payout happens, and when the other one has the unfortunate incident, the payout happens again. So it's like two separate policies for two individuals, but paid as one.
So that's how the structure is. But is it more difficult to get a joint insurance policy? And explain to us. You said it is by and large for married couples, or so how do you define that? That seems a little complicated.
It's not necessarily for. Okay. So first of all. The total life insurance, we have about 1 lakh crores of life insurance premium paid in this country. But people who buy just life insurance, as in who are not buying a savings product but are buying life insurance only,
which is term life
which
insurance.
Which is basically a term insurance product, is less than 0.5% of this premium. 0.5%. So less than 1 in 200 rupees that go into life insurance are actually for the life cover. So now, within that, for us to start talking about joint life insurance, so joint life insurance will be 0.5% of life insurance, of what we spoke about. So it will be so small. I would say the total number of joint life policies for pure life insurance that would be sold in this country would probably be less than 10,000 till date, from the day it has started. So it is that small a market, because the consumers are absolutely not aware of this product. In a country of 1.2 billion, you've got about 10,000 maximum, I'm saying, people who've got this kind of product, right? So it's a very early stage concept. There are very few products available in the market that have a cover like this. But you asked an important question. Can only husband-wife be covered by this? No. You could have husband-wife. And of course, it depends on products. Some products have been created just for husband-wife. You could have parent-child. You could have two business partners. So, you could be getting into a business where an investor is investing, let's say, 20 crore rupees, and they may insist that you go in for a 20 crore joint life cover. Now, what that means is the two partners, let's say two founders of a startup, would have a 20 crore cover each. Because if anything were to happen to any one of them, the 20 crore is available. Because that's the risk that they are carrying, right? So it could be business partners, it could be relatives, it could be spouses. But yes, the primary intention of these products is around spouses and is around family protection, because whether one of the spouses is working, see, today we're getting into nuclear families. Increasingly, they're nuclear families. The protection that the joint family system provided is increasingly less. So in the nuclear family, both parents are equally responsible, and both are required from a financial perspective also. Not just if both of them are earning, but if the one person who's not earning was not to be there will be economic repercussions of that as well, because suddenly the person who goes away to office, leaving the kids back at home, suddenly may not be able to do that, or would require some more support to do that. So to address that, you have joint insurance plans for working spouses and non-working spouses. So now there are products where if you are working, you could get equal cover. So suppose I'm buying a 1 crore cover, my wife can also get a 1 crore cover, irrespective of, somewhat irrespective of her compensation. And if she's not working at all, so see, non-working people or people without income, so to say, could never get life cover. But now there are products available where she could at least get half the life cover. So I can buy a 1 crore cover, and she could also get 50 lakhs if she was not working. Or if she was working, she could get 1 crore and I could get 50 lakhs if I was not working, right? So that allows a bit of flexibility.
So that's a pretty good
That's a very
option.
good cover to have. That's a very, very good cover to have. I think families should certainly consider that, because people who were uninsurable until now are being insured on the basis that they will have an economic impact if something were to happen to them. And the fact that one of the risks in providing such products, you have to look at everything. People will have malintent also, especially when you are, for 10,000 rupees giving a 1 crore cover, all kinds of things happen. What if you bought a plan for somebody who doesn't have income and then kind of just bumped them off? Those things happen. It may sound, however, rude, but those things do happen. But the fact that the primary member also has a life cover, also has an income, starts to prove that no, it's not. That's not what's happening. So there is an income protection, income element here. So it starts to square off.
So then what are its cost implications? Is it very expensive when you compare it to an individual plan? How does that work?
Yeah, so let me explain two elements of this. One is the basic concept of availability. If one of the spouses is non-working, then availability of life insurance to them is not there.
So this is a huge advantage.
So
and that's something
it's not just an element of cost. Cost comes in secondary. So let's say a 35-year-old male is not working or doesn't have any income, commercial income, right? So they cannot be life insured. Now, if their spouse is working and she's getting a 1 crore cover, they can get a 50 lakh cover just because of that. So this product is not available individually. It can only be available as a joint cover. So that is one aspect. The second aspect is that of cost. See, typically, the cost of a joint plan will be lower than the cost of two individual plans. So if I purchased a 1 crore plan for myself and my wife purchased a 1 crore plan for herself, the cost of purchasing a 1 crore plan for both of us is actually going to be lower, somewhat lower, because the risks are somewhat mitigated, it's one family, etc., etc. So, but there can be some odd cases where the cost might be higher. And that is largely because the plans are not very popular today. They're not very popular because it's not because, see, the consumers were not buying life insurance also till 3-4 years ago. So it's not that the consumer doesn't want it, it's just because the industry has not created those products and has not made consumers aware of those products. So it's an early stage product. It will take time to evolve. But right now you could have situations where it's actually more expensive to buy joint life cover. So my suggestion would be, where availability is not the issue, people can still go for individual plans. But where availability starts to become an issue, people should go for joint plans. There's also some age element to it. So as people get older, and if they're about the same age, then joint life plans make a lot more sense than if the age gap is quite a bit, or when they're a lot younger. So as you get older, joint life plans start to make more sense than individual plans.
So what happens to viewers who are watching this program and say that, all right, I have an individual policy, can I look at it, can I convert that into a joint policy? Because now that you're talking about the spouse not working and not having that option earlier, and with a joint insurance policy, you get that option of both of you getting covered. So is that an option, or is it too early right now?
That is definitely an option. That is definitely an option. I think the beautiful thing that's been going on in the insurance industry over the last 5 years, from a consumer's perspective, is that life insurance prices have been coming down. So likelihood is, and that will not continue. That cannot continue. They've kind of bottomed out. So they are at the lowest point. They might actually start increasing from here onwards, is my personal view. It may not happen that way. So if you bought a policy 3 years ago, chances are you can buy the same policy, unless you've developed a pre-existing disease in the middle, you can perhaps buy the same policy for about 20 to 30% less. And when you're purchasing the new policy, you can buy the joint cover as well. Now, it is not always feasible, depending on your particular plan. I would say 90% of the time, it won't be feasible to convert that plan into a joint life plan. Because, as I said, life insurance plans are 20, 30-year plans. They cannot be changed mid-term very easily. You can have some insurance cover increase, etc., and that would depend on your plan. But for them to purchase a new plan is absolutely viable, and the joint life plans are available. So they could say, okay, I've had this plan, I want to move on to a new plan, wait to get the new plan, and then just not pay the premium for the previous plan, so they've got a new plan going. As long as they're medically fine, they should be able to move on to the new plan, and the cost would be about 20% lower, definitely.
Right, so from an overall perspective, how do you actually go out and say, all right, this is the kind of plan I want, and how do you decide what is the kind of cover that you want? Or is that pretty much something that is going to be decided by the company that you're going to buy this joint? And do the spouses also, or the partners, do they need to get medical tests? How does that work?
Yeah. So, see, given the fact that the product you're purchasing is one where you could get 1 crore rupees by paying 15,000 rupees, of course, in a very unfortunate incident, the chances of fraud are there. And for the company, please, I think that the visitors need to internalize this. If 1% of customers commit fraud, that takes away the entire profitability from the company. 1% of customers were to commit fraud. So they have to make sure that not even 1% of customers can commit fraud, right? So below a certain age, below a certain cover, most likely, medicals will not happen. Above a certain age, above a certain cover, and typically that's about 50 lakh rupees of cover, medicals are required. But the beauty of these plans is somewhere you don't need income proof for both. So income documents are not required for both. So as long as one of the people has an income, that is sufficient to provide cover to the second person also. And that is the uniqueness of the plan.
What about pension plans with joint cover? Is that an option that has come about recently?
Very few plans, and I think that's a very, very important question. See, so far what we spoke about was basic life insurance. If somebody expires, both people should have cover. But what about pension? My father was in the army, so the way the pension there works is, as long as he's alive, they get a certain amount of pension. But if he's not there, my mother will get about half of that pension or some percentage of that pension for as long as she lives. And that's necessary, because just because he's not there does not mean she's not there. And women sometimes are going to live longer because they are usually younger by about 5 years, and their life expectancy is higher by about 10 years. So chances are they might outlive the husband by about 5 to 15 years on average, not for everybody, but that is the likelihood. So one of the most important products when buying pension, and one of the most important features when buying pension, is to make sure that joint life coverage is there. Because otherwise what will happen is it only provides pension till the point that individual is alive. When that individual is not there, and one of the reasons people buy this pension is to make sure that their spouses have
precisely
that monetary benefit for as long as they live, because that's what the pension is for. Not that they expire and the wife suddenly has no money left, or the other way around. So Max Life has this product where for a little bit cost extra, you have to pay a little bit cost extra, because of course the chances are.
So that comes as an option or as a rider?
It's an option. It's an optional. It's an option, obviously, because what if the person?
Rider.
It's like a rider. It's like a rider. Yes, absolutely. It's like a rider. So it's joint life is a rider. But if you purchase the joint life benefit. And I find it very difficult because even when you have salespeople, sometimes the salespeople are so young they're not able to explain this concept to consumers. But I think it's the most important concept in pension. Whenever I have spoken to individuals, like when I speak to my father, he's really not worried about himself. He's more worried what would happen to my wife or what would happen to my mother once he's not around.
Of course, we've been doing this show for some time. This is the first time that somebody's actually explained this,
Yeah, so maybe that's kind of
important.
that's kind of my fault. But I think this is the most important piece, and there's only 2 products, I think, in the entire market that cover this facet. Because again, insurance as a product, nobody really explains, nobody really, I don't want to be so rude to everybody. There are 3 million agents out there who are really trying to explain. But the reality is if you ask customers what they bought, they really don't know what they have purchased. I've met so many people.
So apart from that, the option is not really there.
The option is there, the best of my knowledge, with 2 products, one from LIC, one from Max Life. And what this option does is if you're purchasing a pension plan, for a little bit cost extra, maybe you pay 0.5% per year or something extra, you get the coverage for your wife as well. So as long as any one of you lives, that payout will continue. So that just makes it so much better.
So let me be the devil's advocate on this particular point that you've raised. Is it because people assume that the pension that they are buying will automatically go to the spouse if something happens to them? Is that the presumption? Because, if I went and bought a pension plan, somehow I would think that it would continue because that's the way pension is structured.
No. Pension is there till the person whose name the pension is in is alive. The day that person is not there, the pension is gone. Unless it's a government pension which is kind of structured in a certain way, the pension is gone. It's that simple.
That's
and
extremely
every pension product is designed that way. There are very few pension products in the market that have this particular option. And according to me, that's the most important option in a pension product, that you have to make sure dual life is covered. Dual life coverage has to be there because otherwise only till one person is alive the payment will be there. And one has to make sure that dual life is checked. And I'm explaining there is a cost to it. It is not free. So, we as a consumer are also becoming somewhat, insensitive. Everybody has to, because, see, one of the people is going to expire within maybe 15 years of pension. I'm talking generic, basis what data we have. 65 years people buy it. 75, 10 years they're going to pay for something. If the woman is also there, this is probably going to become a 20-year payout, probably a 25-year payout. So there will be a certain cost attached to it. Now we have to understand that. It won't be at the same price. So if you start comparing this product with another product, you will say, oh, this is more expensive, I don't want to take it. Of course it's more expensive. But it's got the benefit.
It covers 2 lives.
Yeah,
right.
Absolutely.
Right. So with that, we're going to take your questions. We've got Chandrabhan Singh, and he wants to buy a health insurance policy for his mother, who's 52 years old. She has no pre-existing diseases. He's keen on buying either from Apollo Munich Optima Restore or HDFC Life Health Assure, and he asks for your suggestions, Yashish.
I usually do not give suggestions on one company versus the other.
But what should he keep in mind overall?
I think
he can go to any of the companies.
Yeah, and I'm also kind of aware here. One is a life insurance company, one is a health insurance company. So they have somewhat different products. See, the most important thing that, first of all, she's 62. She's very lucky not to have pre-existing diseases. She's got lots of options. She can purchase any one of these plans, and she would, in my view, get the plan. Of course, she'll have to undergo medicals, but she will get the plan. I'm not going to comment on one company versus the other because that's just being unfair to one company. But overall, I would suggest go for a plan which has lifelong continuity. Go for a plan which allows for some bit of escalation because your mother may live another 20-25 years. And in 20-25 years, if you're buying a 5 lakh cover today, the coverage may be, you may require at some point maybe 20 lakhs, 25 lakhs. So have some escalation ability built into it. Go for a plan that does not charge you for claims. So, claims don't have deduction on it. So I think you'll, once you go through the features, you'll get a direction of which plan I'm suggesting. But I think, make your decision basis that kind of information.
Right, we've got Smita, and she asks, what are the risks associated with porting health insurance plans after making a health insurance claim?
I think the risk associated is that you apply for porting, you do not get porting, and you do not continue your existing policy, and you're suddenly left without a policy. That is the biggest risk. And I've seen a few customers fall into that trap. Of all the port requests that we get, we are able to port about half. So about half the people manage to port and about half the people are unable to port. Insurance companies are very wary of taking on porting cases. The reason is most people want to port after a claims experience. And at that time, they start to become a serious risk. And you can imagine, right? So you suddenly become not a risk, but a definite cost. And so the insurance company is kind of wary taking that on, right? So, so I think the biggest risk is make sure that your premium is paid on time for the previous policy. So that just in case the porting does not happen, you have to just make sure your policy does not lapse. Because if it lapses, there's a chance that the previous company also doesn't want you around because you become a cost for them. And that's unfair of the previous company, according to me. But, you know, companies really don't want you around when you become a definite cost.
Right, we've got Surya Kumari, who's 60 years old and has to take a travel insurance plan before applying for a Schengen visa. She suffers from cardiac ailments and diabetes and asks, would this impact the possibility of getting her covered by a travel insurer?
No, she will be able to get a travel insurance. She has to make sure that when she purchases the plan, she purchases a plan which includes pre-existing diseases without exclusions. And she should shop around a bit. Because not every plan includes pre-existing diseases, and not every plan will give her a policy without exclusions. With exclusions, she will certainly get a policy, and without pre-existing diseases, she will get a policy very easily because it doesn't matter because all her pre-existing diseases will not be covered. So she has to buy a plan which includes pre-existing diseases and which does not have exclusions, and she has to be clear in her mind that she's not going there to get some surgery, etc. done, but in case something happens, untoward happens, she has to be able to handle that emergency, and the cost of that is coming from the insurance company.
Thank you, Yashish. That's all the time that we have on this show. But last week we asked you a question, what happens when you surrender your policy? And the correct answer is it gets cancelled, of course. And Pooja Jain, congratulations for the right answer. This week's question is a group life policy provided by your employer will stay in effect if you leave your job. Is that true or false? You can send in your correct answers at queries@policybazaar.com, and we'll see you with another episode next time. Goodbye.